Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.
The royalty space is uber competitive, now leading to innovation in deal terms and M&A transactions. This is Paul Harris for Kitco Mining at the Gold Forum Americas in Colorado Springs. Joining me to talk about this is Shaun, CEO of Triple Flag. Good morning, Shaun.
Paul.
Welcome to Kitco.
Thanks, good to see you.
How would you describe the competitive environment for royalty and streaming companies at the moment?
I think it's always been competitive, but I think at the same time you're ultimately competing with debt and equity, and of course that ebbs and flows. And I suppose our business was founded 7.5 years ago with a view that the mining sector, there's almost a secular trend that there's less and less capital available, risk capital for the sector. And really this is a great way to contribute capital to the sector. And particularly if you compete at the big end, which we prioritize with, the big three, we've got the balance sheet to do that. I think there's rational competition there, and people are focused on generating returns. So I think there's more deal flow opportunity than there is capital in the sector.
Okay, speaking to a number of developers recently, the message I'm getting is the debt finance is there. They're really struggling to raise the equity component. Is that an opportunity for royalty and streaming companies to step in?
I think it is, and it's interesting. So our largest transaction we did in 2020 was a gold and silver stream on North Parks in Australia for about $550 million. And we prioritize playing in assets that are really producing with a lot of optionality, or ones that really where we're last checks in on construction. We don't take on permitting risk in that. And we saw shortly after that a lot of capital get deployed in the sector, but really not a lot of cash generating or near cash generating situations. A lot of development stage stuff and lower returns than we'd seen in a while. And we really sort of committed less capital during that period. This year, we've seen a return of that. And I think part of it is sometimes acquisition financing. I think, to your point, equity's tough. Like we've seen some Australian assets, for example, the team with SPACs wait for a year or more in order to close that transaction because they really struggled to raise the equity. And I think we're seeing more and more of that. So on the one hand, it's an opportunity. I think on the other hand, you've got to really look at the risk carefully because you don't want to overburden the asset, and we spend a lot of time on that. But we're seeing a resurgence of those sorts of deals now.
Okay, one thing I'm sort of seeing in the marketplace and an increasing number of deals, the royalty and streaming companies essentially offering the full service of financing. They'll offer you debt, offer you equity, or the developer's debt, offer them equity, and obviously the caveat is put a stream or a royalty on it. Is that the direction you're going?
No. So we were told when we started the business in 2016 that really you had to do that sort of thing in order to successfully compete. And in my view, you're starting to violate the model. There's a different asset class with equity and debt. And it's not puritanical. I mean, we have at times written small equity checks as cornerstones to help a fully financed situation. But then our primary focus is committing meaningful capital on a stream, for example. We've found it much more effective to partner with other pools of capital that specialize in those parts of the capital stack. They bring different expertise, they bring different lenses, and we'd like to continue to do that. If it turns out in the future things change, we'll reassess that. But I think some of the competitors have so much cash on their balance sheet, increasingly they're looking to do that. I don't believe we need to.
That must be tough, having too much cash to know what to do with.
It's a high-class problem, right?
Yeah. Okay, so how are you focused on growing Triple Flag?
I think the same way that we have been. So you'll look in the 7.5 years, we started off with nothing. We've built this team, we've built this business a deal at a time. And our focus really has meant that we're focusing on that cash flow generating flywheel with optionality. And we've had the highest growth rate in actual ounces in the sector since our inception. So from 17, our first full year of production, we had a 21% CAGR. We'll do about 27% this year. And then when you look at our intermediate peers, beyond that, we've got about 140 plus thousand GEOs a year. So a lot of organic growth before you consider really this basket of 200 non-producing assets over and above that's in the portfolio. So I'm a top 10 shareholder. My whole team owns a lot of equity. Our real focus is trying to make sure that we focus on returns rather than growing for the sake of it, and just being discerning, because I think this sector is just an interesting moment in time. There is so much opportunity on the horizon.
Okay, there seems to be a lot of royalty streaming companies chasing perhaps fewer and fewer deals. And I hear from some of the developers that the terms being offered are getting more and more generous to the royalty giver. Why is this, do you think?
I think, firstly, a pendulum tends to swing. It ebbs and flows. I mentioned earlier that we saw some deal terms, I'd say, prior to this year for a couple of years, which were certainly lower IRRs and more generous terms than we've perhaps seen on riskier situations. You have a choice. Ultimately, we're capital allocators. That's what we do. And so in that period, we just committed less capital. I think people have their own capital priorities over time, and some of those groups, I suspect, were looking to fill a longer dated part of their pipeline. We have a 20-plus year portfolio duration, so that's not a point of it. But I guess to your question, I'm not convinced that there is a fundamental change. We've seen rates go up substantially, and I think in some ways we're seeing a recalibration where we saw lower rates of return in the sector in the last couple of years. I think we're seeing that change now.
Okay. Now, Triple Flag, as you mentioned at the beginning, has been involved in consolidation and M&A in the space. With the, well into the double digits of companies out there, is more consolidation necessary, and will it occur?
If I zoom out beyond our space, I think the gold sector is so fragmented. Consolidation, just to make the sector relevant, should occur. And yet it's often hard to do. So I think there should be more of that. Interestingly, we initiated the Mavericks transaction. The conversation started at this conference 2 years ago, and we reinitiated actually at this conference and closed it in January. And that was a simple make or buy decision. It was a deal that made sense for their shareholders as well as ours. And we're really happy to close that transaction. I think there's scope for more consolidation in this space. I think the social barriers are usually the biggest issue, and we'll just continue to sort of be very focused and opportunistic and focus on returns.
By social barriers, do you mean sort of entrenched managements not wanting to give up their seats?
Correct.
Okay. Now, in the precious metal space, what things in terms of trends, what concerns you at the moment and what attracts you at the moment?
I think firstly, if I go back, we're just structurally bullish gold and precious metals. The reality of central bank money printing, even though we've seen some tightening, in the grander scheme of things, since the financial crisis, there are trillions of dollars of additional liquidity in there. And that's not going away anytime soon. So I think the reality that we're seeing reasonable pricing for gold right now, and the outlook in the short to medium term, we're very confident about that outlook. I think it's a good environment. But the longer term trend is interesting. When I was born, I think gold was $35 an ounce. You draw that line. So although we don't invest on heroic assumptions of where gold is going to in the future, we will look at different futures and different views. I think the longer term trend is very positive. So it's a great environment to be investing.
Okay. One of the sort of key points that a lot of companies have been focusing on recent years has been ESG. That's really come up the agenda. But more recently, I think there's been people are starting to distance themselves from ESG and drop the ESG thing because it's the difficulty in measuring the S&G, the social and the governance. The ratings agencies are stopping to giving ratings because of that. They're getting a lot of pushback. And I hear from a lot of people that, really it's all about carbon emissions now. Well, what's your view on this?
We set this business up even as a private business, really as former miners. And this is probably less appealing to investors at the time, rather than saying we should be doing the right things because we understand the pressures that mining companies are under to have a social license to operate. They've got to focus on these emissions, on water usage, their community engagement and social programs. So we just try to do the right things. Like we'll invest alongside our mining partners on scholarship programs and their community support programs. We've always tracked our CO2 from an early stage, not just scope 1 and 2, because these businesses don't generate a lot of that, but scope 3, so our share of the metal entitlement. We publish it, and then we invest in offsets, so we're carbon neutral. And that is not a large cost for our business, but we feel as a catalyst for the space, we have a role to play, sharing best practices and doing that. And we're reasonably new in the public space. We only listed a couple of years ago. We just got our first MSCI ratings of AA, amongst the best in the sector. And we've got a Sustainalytics rating. I think we're 4th out of 114 precious metal businesses globally. So the output has been recognized, and we've attracted capital as a consequence of our approach.
Okay. Well, I think the whole aspect of carbon offsets and credits is a good rabbit hole to go down at some point in the future, but perhaps not for today. We're at a gold conference. When will gold stocks get a break, do you think?
You know, it's a tough one. In some ways, this is the best of times when you're looking at gold price and the environment and just the overall uncertainties. And yet the space is quite unloved. I think you are seeing some stories that are getting recognition for being able to execute well. I mean, I know you caught up with John recently, and the Alamos team has done a great job of doing that. And you see that reflected in their multiple and the attention. I think the bigger challenge for the sector is we still aren't attracting generalist money in any sort of size at all. And it does feel like you continue to see redemption. So when, I honestly don't know, but I think this is a really interesting time if you can marshal capital and execute when that does change to be able to build a really interesting company.
It must be quite frustrating for some of the gold producers because they've shown capital discipline, they've got their balance sheets in good state, they've been doing returns to shareholders, they've been giving multi-year production, they haven't really done anything silly, and still the market isn't really responding. They're just running out of levers, maybe.
No one said life was fair, right? Yeah, I think you're right. But at the same time, perhaps the catalyst to get more of that attention is actually consolidation. I think if you can create a little bit more critical mass and relevance, because the sector is still, by and large, quite niche, that might be the thing that draws more attention.
Well, maybe we'll get an M&A announcement, a big one, at this event. This is Paul Harris for Kitco Mining at the Gold Forum Americas in Colorado Springs. Shaun, Usmar, thank you very much for joining us today.
Thanks, Paul.
And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Gold Forum Americas is brought to you by Metalla Royalty and Streaming.